Understanding inducement is an essential skill you must have for good trading. Not only can we use this understanding to filter out bad trades, but we can understand inducement to select high quality trades. So let's get right into it. What is inducement? So inducement is when price falls short of a key level and retraces against the trend. This retracement induces or entices traders into thinking that there is a reversal. These traders then rush into their positions, becoming trapped. Okay, and we don't want to be these trapped traders. So continuing forward, let's look at a visual of an inducement leg. So as you see here, if you have a low and then you have a key level right below that low, price is coming down, and then we start to retrace against that bearish trend in this example. So this green line, this retracement, against that bearish trend is the inducement leg. And this is where a lot of traders get trapped, only to see price then roll over down to the low and to and through the key level. Okay, so before we continue forward, I do want to just touch on what is a key level. What do I refer to? So there's plenty of times where I'm looking at a key level for a framework of a trade, a higher time frame, 1 hour fair value gap, a 4-hour order block, etc., whatever the scenario may be. But when I'm referring to inducement and in today's lesson, I am typically looking at these three things: session highs and lows, key opening prices, and then opening gaps. And with opening gaps, I'm looking at a new day opening gap and a new week opening gap. So continuing forward, our job as a trader, what do we do with this information? What do we do with our understanding of inducement? So there's going to be two scenarios as you see here. Let's talk about scenario A first. So sticking with that same previous visual, you have a low right here and then a key level not too far away below that low against that bearish trend. So scenario A is that price pushes up, and again, as we've already established, this is our inducement leg. Now, the number one thing that we don't want to do when we have these relative equal lows is rush into a long, right? This is a low probability long, and any retracement is likely to just smash through that down to the low in the key level. So using that information again, ideally what we want to see occur is the inducement leg be a little larger and deliver us up to a premium of a dealing range and or sweep buy side liquidity. Then it gives us a setup down to those lows, the low and the key level, getting back in line with that bearish trend. Now, scenario B, which is completely valid as well, and we're going to take a look at some examples of scenario B here, is when you have this low, okay, and it falls short of the key level, you see your inducement leg. And then if you don't get a deep retracement, that would be a logical short setup back down to these lows. Then you just wait for both lows to be swept here, and then you look for a reversal in the opposing direction. So in this case, it would be to some form of clear buy side liquidity pool, some premium objective, etc., etc. Now, again, what we're attacking here before we get into the clear chart examples, what we're attacking here is just trapped traders and classic retail logic. So if you think about scenario B, what we just panned out here, this move lower below two relatively equal lows, that is trapping traders trying to play a breakout below lows, thinking that that's support being broken. Okay. Once they're trapped, at the same time, early longs who got stuck in that inducement leg from the final push upwards that was really, again, just enticing early longs, they're stopped out as well because they put their stop below this low and or this key level as well. So once both early longs and breakout shorts are trapped, then the better, more efficient move is likely to occur after. And that's where we want to be positioned in. So let's progress and let's go to example one. As you can see here, I've included the market and the date, so you guys can also look at this example, look at all the examples and see them for yourself. Okay, so example one, this is the 1 minute time frame on ES, and let's break this down. You see 9:30 opening price, and you see a clear open trend of what? Bearish delivery. So Where is this low falling short of? London low here. So as we've established with the visuals, this right here is inducement. So this push upwards is just trapping early longs. It's enticing early longs to think that this is a complete reversal and now we're going to go all the way back up to the highs. But you need to be careful in these scenarios. When you see a low right here, the intraday low, and you're seeing this bearish open, and that intraday low is just above a session low. So in this case, it's the London low. And that London low on top of this is just above a new week opening gap. So we're combining two key levels here. This is an unlikely scenario for a reversal to occur. So think back to scenario A and B, where we either wait for price to come up and give us a short. If it's valid, if we see a clear retracement to a deeper premium, sweep of a high, and then we go lower, or we wait for the lows to be swept and see if we see signs of a reversal or a long in this case then. Okay, so if you were to paint a low probability setup around this, you're saying, okay, we swept a low. This is the Judas swing, the manipulation, the false move below 930 open. Here's your change in the state of delivery. This is an order block, time to go long. Well, nope, that's an easily avoidable losing trade because our priority as a trader is liquidity. And again, it's super simple, but it's so powerful. When you see a low fall just short of a session low and an opening gap, really refrain from taking that long. The better moves, most likely, majority of the time, going to occur after both levels are swept and we deliver to all levels if it's London low or new week opening gap. So instead of taking this trade, all you have to do is understand this and then apply patience. And the better move is going to occur after we sweep the London low, after we deliver to the new week opening gap. So again, see how we came below 930 open. This is your inducement leg. You run that low, okay? And we mentioned attacking traditionally taught retail ideology. This move lower is doing what? It's knocking out early longs that were enticed, that were induced from this leg upwards, and it's trapping breakout shorts trying to chase lower prices below London low. Okay, all we have to do is wait for that sweep, trapping both traders, and then look for our setup after that occurs. So the setup here is much better than this one from the previous slide. Okay, so let's move forward. Example 2, NASDAQ NQZ 2025. And the date we're going to be breaking down is September 29th, 2025, of course. So let's look at this. This is the 1 minute chart on NASDAQ. And what do we see? The price is delivering lower. If you look at the time axis at the bottom of the chart here, you'll see that we're at the end of the AM session and entering lunch session from 12 to 1. And price is delivering lower, and you're seeing that bearish trend. And what do we see? How far away are we from a key level? Well, you have London low here, and you have midnight open virtually stacked on top of that. And those two things are strong magnets for price. Okay, so when you see price fall not too far away from that, and you see it push upwards, this is more likely to be inducement. And by extension, it's a low probability long, taking some pattern trade, a fair value gap, a breaker, whatever it is. It's lower probability because, again, to reiterate, our priority is liquidity. Okay. And when we have multiple magnets below this inducement leg, it's just a better idea to wait for scenario A or scenario B that we described earlier on in today's lesson. So as you see here, this, for pattern's sake, if we were rushing into a trade and or didn't understand inducement, we're looking at this and saying, okay, we run a low. Now we're breaking above a swing high. This is a market structure shift. This is a pattern 2022 model with a fair value gap. Well, isn't it time to go long? Well, no, because we understand inducement. These are the trades that we want to filter out of our system because we're not pattern traders. We prioritize liquidity and understand when early longs, like we've been discussing, and breakout shorts, and vice versa for when we're looking at a reversal at the highs going lower. We understand these things that puts us in a better position to succeed. Okay, so as you can see here, we did bleed down, run these lows, equal lows, relative equal lows, and ultimately London low and midnight open. And as we've discussed in the first example, look at what occurs after that. So this is scenario B. So as we came up here, we create equal highs, relative equal highs up here. So with scenario A, waiting for a retracement and then going lower, you did see that retracement and push lower, but I'd rather at that point just allow price to run lower, run London low, midnight open, and the low of the intraday session. And then you're looking back and saying, okay, well, they left clear buy side liquidity here to target. Now shorts are trapped, early longs are trapped. Let's wait for the entry confirmation. What is the entry confirmation? 2 SIBIs, close above, that's your entry. We do spend some time here, but ultimately we deliver up to lunch high. So see how the much better move occurs after the inducement and then the trapping of traders takes place. All you have to require for this is an understanding of that, but then patience, right? Patience to wait for that inducement to occur and then to see if you do get that entry confirmation in a reversal scenario like this. Okay. Example 3. September 23rd, 2025, NQZ 2025. And let's go into this. Now we're looking at NASDAQ again as well. And another beautiful example where you're seeing price go lower. Okay, you're leaving buy side liquidity right here. And then right before this low is put in, what do you see? Look at this swing low right here. That's exactly to the tick on London low. So the way we internalize this little push up here is, okay, that's trapping some longs to chase who think that London low, that double bottom, is a very strong support level. But we don't believe that. We want to wait for price to move down rapidly. That's going to knock out those early longs and trap breakout shorts. Then again, our job as traders is to just wait for the reversal confirmation where you see this inversion here. Okay, we close above it. That's your entry, stop below the low, spooling up to buy side liquidity pool as we've established here. Okay, another great setup. But again, when you see a London low, a session low, a new day opening gap, a new week opening gap, any of the key levels that we mentioned touch to the tick, and then we go up and see this kind of double trapping of both sides of retail money. When you see that occur, that is a very strong sign that, okay, now it's really time for us to see the real move in the opposing direction. Okay, so example 4, September 17th, 2025, we're still sticking with NQZ 2025. And as you see here, we're using the new day opening gap in this scenario. Okay, so this here, let's break this down again. You see the time axis at the bottom of the chart. We're actually in the PM session, and you're seeing price go lower. You see a retracement, price goes lower again. And then right here, why is this significant? See how this low pushes us higher? This is your inducement leg, but why? Because this low is just above a new day opening gap. And you have to understand that a new day opening gap, a new week opening gap is a very strong magnet for price. And it just is common sense that if you see a bearish trend, you see a swing low just above that opening gap, then it's probably better for us to wait for that to be swept and delivery to the new day opening gap before looking for any entries. And in most of these scenarios, you're rewarded for your patience. Because again, I know I sound like a broken record, but to really hammer it home, this push up here is trapping traders, trapping early longs. This push down is trapping breakout shorts. They're both knocked out at this point. Then you wait for your inversion entry. If you're a breaker trader, low, high, lower, low, you have a breaker here as well to take. That's your personality, of course. But the priority is your understanding of inducement, right? So the previous examples were a London low, were other session lows, new day opening gap. It's the same logic applied. You're looking for an additional magnet for price below that intraday low. You want to see both deliver to, then your entry confirmation. And you're going to see better setups like this. You just have to be patient, okay? Example 5, same day, September 17th, 2025. Sticking with NASDAQ. And this is the 30-second time frame. And this is another really good example of scenario A that we mentioned to start today. Okay, so you're seeing over here, 9:30 open, obviously an intraday trend of bearish delivery. And then you see a deep inducement leg. Now, this is a great example of scenario A, where we do get that deep inducement leg, and we don't want to be fooled into thinking that, okay, this is a low of the day. Now, why? Opening range low. What is that just short of? London low. So when you see two session lows stacked on top of each other, stacked in very close proximity, that is the most likely draw on liquidity. Okay, so by extension of that, we want to see a logical short setup. Scenario A, as we described earlier. You see a retracement. As you can see on the right side here, this is my dealing range, discount and premium, using the opening range high and low. You see that retracement to premium. You run this high. You're running highs from over here. And then you start to see price break down, bullish order flow break down. These two consecutive, or excuse me, this one consecutive BISI here, not consecutive, BISI with SIBI overlapping. That's a balanced price range. You close below, that's your entry. Your stop is above the BPR. And now, again, after these longs are trapped, okay, and people who think that this is a low, they're trapped. Now I want to see that trend continue down to our engineered sell side, the dual session lows. Okay, so understanding inducement in this scenario is extremely powerful, extremely significant. So A, we're not chasing any longs and expecting price to go to opening range high and beyond. And B, we can get a really good setup if we can just wait for that retracement to a premium. So hope you guys enjoyed this video. As always, let me know if you have any questions in the comments. I would appreciate a like if you are not subbed already. Please hit that subscribe button, and I will talk with everybody soon.